What is up? Steve here. I hope you are doing well. About 8 years ago, a buddy of mine, he is a real estate broker up in the St. Pete, Tampa area, and he reached out to me and he said that I have an opportunity for you. I can't really talk on the phone and want to meet with you in person so my partner and I can meet with you and talk further in detail. I said sure. So about a week later, he came out to Fort Myers. We met up with him. And he proceeded to explain that he has a large institutional buyer, large institutional investor that are buying single family homes, and they're buying a lot of them. So needless to say, I was intrigued. If you haven't seen any videos in the past, I'm a real estate broker here in Southwest Florida. And obviously that's our business. We assist people in buying and selling real estate and also property management for annual rentals. Anyway, so I said, what are they looking to do? And he's like, well, they basically bought a few hundred homes from them up in the Tampa, St. Pete area, and they're looking to expand further south. So I was like, we can absolutely help. So we made arrangements with them and basically got the complete setup. So these institutional, well, it turns out the company was Blackstone, and at the time, they branched off, and it was a company called Invitation Homes. And I think they have since sold certain funds. So how it works is basically they have their specific criteria of what they're looking for. Primarily, it's usually single-family homes, usually 3 bedrooms or more, 2 bedrooms or 2 bathrooms, usually a 1-car or 2-car garage. And they had, at the time, the property couldn't be so old. Also, they had strict guidelines in terms of the different flood zones. And, you know, we sold a handful of them that had pools, and then eventually they transitioned out of pool homes because of the costs. The cost of insurance was a lot higher. We even sold a couple that were actually on canals. They steered away from that because the rising costs of insurances and everything at the time. Needless to say, we sold them, I don't know, 100, 130 homes, something like that, in literally a 6-month period. And it was kind of like game on. We're helping this institutional investor, and I really didn't know much about institutional investors at the time. And sure enough, they were paying all cash for these properties. However, they were taking on debt. And I think that that's one of the misconceptions for a lot of people is they think that these institutional investors are coming in, they're buying homes, and they're not taking any kind of debt at all. And that's simply not true in most cases. Now, present day, obviously, we're seeing a lot of institutional investors compete with primary home buyers, which is, you know, a lot of people are just getting outbid. It's very frustrating. But a lot of people don't understand is a lot of these institutional investors, even the smaller ones that are out there, they are causing some damage in the market as well. And they are taking on debt. Now, a lot of times their debt position, they're not, 15, 30-year fixed interest mortgage interest rates fully amortized. And a lot of them are floating debt, which means that they're just basically floating along, or they were fixed for, say, a 2-year, a 3-year, a 5-year period, and then those rates begin to adjust. When you're buying real estate, when investors are buying real estate, there is a long process. You have to hire real estate agents to scout out the properties. You have to have a team of inspectors that were going out inspecting these properties. You had to have a team of contractors going in and fixing these properties up. And by the way, they wouldn't even assume any tenants or even any sellers leasing back properties at all. The properties had to convey vacant. So they would have to have a team of contractors going in, fixing these properties up to get them rent ready. And at the time, we were also assisting in leasing these properties out for Invitation Homes as well. So they had to create a team around that. And we got canned because they actually had their own internal managers who basically were on salary positions. So instead of paying us commissions, they basically created their own in-house teams and then you know, we got booted and they had their individual teams in place. So there's a lot of moving parts, you know, when you're renting real estate. And then you had to have your handyman if something broke while tenants are there. And, you know, there's a lot of things associated with renting properties out, which is getting to my next point, which is the yield that these investors must make. So a lot of times these properties are basically put into almost like tranches, and they're put into basically they're bundled up and they're put into different funds, and then these funds are either sold or they have other investors invest into these funds like pension funds. So they have to provide a certain yield, and if they're not getting that yield on these properties, then they have to they have to pivot. So just like Zillow, when Zillow, you know, really got caught with their pants down, they had to pivot, and they pivoted, and they had to sell literally thousands of properties. Unfortunately, they sold it to other institutional investors, which kind of sucks for the home buyer, but they just were not making the yields in terms of flipping the properties. Now, when they're renting the properties, they have to make a certain yield. And if they're not making that yield, or that yield starts to compress due to interest rates rising, which we all know interest rates are rising, the Fed is going to continually to increase the Fed rates as well, which is going to increase all the adjustable debt. So that yield is getting smaller and smaller and smaller. And when that happens, I believe that these institutional investors are going to start looking at other ways to create larger yields. And ultimately, I believe that these yields are going to come in the form of less management intensive investment portfolios out there, whether that's treasuries or certain bonds. I think that they're going to find other outlets to take all their profits and their money, and they're going to put it into other outlets that are less management intensive, like real estate. They're going to get out of that, and they're going to go into these other investment portals that are going to provide a better return. And ultimately, what I believe is going to happen is they're going to start liquidating these properties once certain debt positions get kind of out of control as well. So let's go back to Blackstone for a second. Like I said, it was probably 8 or 9 years ago when I had that meeting with my buddy Jeremy up in St. Pete. And at that time, Blackstone, I believe, was one of the few institutional investors actually investing in real estate. And at the time, there wasn't a big influx of real estate investors coming into the market and buying a bunch of real estate. So I think certain institutional investors have big equity positions, because I know those properties that we were selling to them back then, if they didn't refinance out of them or whatever the case is, still have substantial equity in those properties. Now, properties that they're buying recently, I think that a lot of them are buying at the top of the market, whether it's Blackstone or other institutional investors. And I think that when they get wind of the market starting to shift and even going down in price, especially ones that bought at the peak, I think they will be the first to start liquidating, especially if they're combating prices going down as well as interest rates rising. I think their backs are going to be up against the wall twofold, and I think some are going to be quicker to liquidate than others, and the ones that are going to be quick to liquidate, I believe they're going to do it probably in masses. So that could easily flood the market pretty quickly if some of these institutional investors bug out. You know, even if it's a small institutional investor that was really just concentrating in one area of a specific state, and they drop 1,000 properties on the market, that could have a devastating effect to that local real estate market. Time will tell with what's going to happen with all these properties, but I do anticipate they're going to start trickling into the market probably sooner or later, and a lot sooner than we even think. Let me know your thoughts below, and I'll see you guys on the next video. Thanks a lot for being here.